go and cross his T's and dot his I's before he comes into here. Simple as that. We're going to be in trouble, though, I think. We haven't heard the end of this one by any stretch of the imagination. What's that got to do with trading? Absolutely nothing. So let's get out of here and talk about something else that is related to trading. And that, of course, is the pound versus the US dollar as we come towards the Open of London session. As always, we are attempting to... Happy Monday to you, Paul P. We're attempting to find a breakout from the current situation on pound versus the US dollar as London session opens. Parameters around which I'm trading this at the moment are for the last two periods, really. Yesterday, or that being Friday, of course. Friday's trading range, including today thus far. Now, it looks like Friday, the pound had a bit of an off day and burst through the lows, created a new low and a new high, a lower low and lower high at that. That's not an issue. The issues that we do have, we're trying to trade a breakout here, are threefold, really. We've got an untested daily pivot head. That's not a problem because if we're going to trade breakout long, that should be well and truly done and dusted. But if we're looking to trade a breakout short, weekly pivot is definitely in the way here because it would be pretty much, it'll be a little bit above our entry because we'd go 3 pips below the low. But there's also a recent high there that I don't want to trade into. As far as trading long on the breakout's concerned, we'd have to go long 5 pips above this candle here. And if that were the case, let me see what 5 pips does. Gets us bang on that high, right? We don't want to do that either. So it's a no from me. Again, I know we're not trading much of the pound US dollar breakout anymore, but that's because we've added these very, very tight filters, if you like. And that's good because if it does go, then we should have good results or a good win-loss ratio on this rather than have what I didn't consider to be a good win-loss ratio anyway. When it goes, yes, but that's not my thing at the end of the day. All right, so that's pound versus the US dollar. It's a no from me. I've got a ton of stuff to look at, including everything pretty much against the Swissy. Swissy must have had a good day on Friday, or a good week last week anyway, because the weekly charts are telling me that game changer bars all over the place are against, against, yes, the Swissy, and going short against the Swissy. So looking for Swissy strength. Don't know what fundamentally is behind that, but Ash will tell us all about that in fact, Ash has joined us. G'day, bud.
Hello, mate. I thought I'd better join you because I'm looking at a FTSE long and it might well be on the open.
Okay, let's go.
Let's see if it's triggered. You know what? I'm going to take it long here straight away. Now, let me show you what we got. And it's against my better judgment in some respects. So I'm just going to show you levels. I'm going in light and I'm going to go in twice if I need to. Hold on. Sorry about that. I needed to share screen quite early. Not aiming for too much here.
Hi, John.
Not aiming for too much. Let me see. I've lost Zoom. There we go. Sorry. Do you know what? I'm still on this laptop. I've figured out what the problem is with my new. Here we go. There, you can see my charts. Hopefully.
Yes, mate.
Okay, so the long is on. Actually, I don't need much more than this, and this is probably going to be pretty much all I'm going to aim for. I'm just going to get out of those highs again. And my apologies for not kind of getting on earlier, but it was a bit tough, to be honest, because I could see this sort of like building up just before, but I like to kind of see it on the open. There is a little bit of a downside coming in with the Unilever. Let's see if we can pop out here and not worry. Can you still see my charts?
Yes, mate.
Okay, great. All right, that's going to work well then. All right, let's see if we can get one more pop to the upside. US is closed today, and PBOC China has decided to lower interest rates. Now you can sit. Now let me show you why this
Wow,
level
have
is.
they?
What's that? Sorry.
I said, wow, have they?
Yes, they have. Yeah, and you can see that this is the top end of the pattern here. So we're just sort of looking to come out of the top end of the pattern here. Now, might have just missed the opportunity there, but I think that's okay because I'll probably end up going in twice here, and the next one will be down here. So if this does start to drop after the open, and I have to say Unilever is down 4.5%, and that's one of the biggest companies in the FTSE 100. So the fact that they're down a seismic amount, and we've got the likes of Royal Dutch Shell only up 0.5%, AstraZeneca up 0.5%. So you rebalance that with Unilever down 4%, this market could actually turn around without too many problems at all. So that's why I think we come out at first point of asking, which hopefully it'll get back up here one more time. So China lowering the interest rate level and the United States being off today, it should probably create enough volatility just to get one more pop. Here's the pattern, and that would be that so what we're doing is aiming for the upper end of that pattern there. So if we can get just back up to that upper end of that pattern, then I think it's worth coming out. If it doesn't quite get up there, then I'll probably try and come in on the daily pivot, and that's what I would have preferred to do. But I saw so much like upward pressure just before we started this morning. I thought, you know what, I'm going to have to enter a bit earlier than I would normally like. So now if you get in near here, you'll be close to where I got in. The actual target is going to be around about 6 or 7 pips from this particular entry price here. So we'll see what happens with that, mate. But the overall kind of messaging here is that the UK looks like it should be going higher. That Unilever price point is difficult. Now, I didn't expect them to be coming down quite as much. I think the fact that the price action is holding is a relatively good sign. But for one of the big stocks to be down 4.7%, is quite high. The only caveat to that is that GlaxoSmithKline, which is just a little bit weaker than Unilever in relation to market cap, is up near 5%. And the reason for that is that that Unilever is trying to buy one of the arms of GlaxoSmithKline, and GlaxoSmithKline are holding out and maybe going to be sort of spreading around. So we are looking at this long, and we'll see what happens. Now, if you get in here, you'll be pretty close. My price point was 75.07. It's now at 75.9. So you'll be getting pretty much the same price point as me. And as I say, I'm aiming for the upside. So you may well want to try and get on this long as well. I'm not sure whether people want to do it, but that's what I'm doing this morning.
Right about, I'll go and have a look at some game changer bars, and then George will be in shortly thereafter, and we'll have a good old yak to George. From a fundamental perspective, is there anything on the horizon, well, on the recent past that I don't know about? Anything outstanding? I know we've got the Fed next week. I know that's probably the next big thing, but anything else going on?
Yeah, actually, I think the Aussie is starting to look really interesting again. COT data is very positive for the Aussie. I think from what I was seeing, I think that the seasonality was around about a hold. But the most interesting point, I think, about the Aussie is that those bond yields are starting to really ramp up, as they are really in many parts of the world. So with the States, I think it popped up like 7 basis points on Friday. So there's expectation that the Fed are going to be raising interest rates. And we were really waiting to see what are the other nations going to do. Are they going to fall into line? And I think those Aussie bond yields popping up is suggesting that they probably will. And I think the significant thing about that is that the Aussie is actually, from what I can tell, you'll analyze it, I'm sure, but it's at a pretty interesting price point. So Aussie for a potential long, I think, is on. I still think silver's a really interesting trade, and I've holding on to that silver point. It might not come down as far as I as I wanted to get that second position on, but I wonder whether, even though we see kind of hawkish sentiment coming from the Fed, whether some of the others might start to play a bit of catch up, so it starts to rebalance the price of the dollar a little bit. And I thought the Aussie could be one that could be of interest to people.
Yeah, interesting, isn't it? A week out from the Fed and interest rates expected to go. I'm not sure if are they still expected to go this next week?
Well, for the Fed?
Mm-hmm.
Supposedly, mate, and I think that's the interesting thing, isn't it? Is that what happens to those interest rates from the States? Do they follow through? The other thing that I think is also interesting is that China are lowering in their interest rate because there is a slowdown in their economy, and that's the big question for the Fed. Do they really have the timing right with this? Do they really have the tools to do they really have the cushioning to be able to raise interest rates 4 times this year? I don't know. And if they, if one's going to go on hold, it'll be this one, won't it? It'll be the first one, because there's still maybe data that needs to come out. There is an expectation that interest rates might start to actually subside a little bit. Inflation might start to subside a little bit around about the April time, because as energy costs are one of the big drivers, and the Western world gets warmer around about the April time, energy demand is going to come down. So that might well drive us to kind of just a little bit of lower inflation in the energy price. So it is possible that that we might see inflation just a little bit more controlled. And if the Fed are assuming the same thing, will they maybe push back one of those interest rate rises? And I think there's a possibility. I'm not so sure about 4 this year, mate.
Well, we go back to the will they then start saying, oh yeah, interest rates, inflation is transitory? Of course, as we always knew it was transitory.
Yeah. Well,
so here we go.
I think they've accepted it's not transitory, but it might still be able to be not quite as extreme and out of hand as many people are sort of suggesting. There we go. Profit taken on the FTSE 100, so we get a nice win on a Monday morning, mate.
Well done. Monday mornings are good for you, aren't they? Seem to
We've
work
had
well.
two in a row, which is dandy. Yeah.
Well, that's 2 out of 2.
Yeah, we've got 100% success rate.
that'll do. Good job. Yeah. I had to lose last week. Not happy, but anyway.
Oh well, yeah, that's never nice. Do you know I think what's interesting, what I'm looking at with the FTSE, is that this could really explode to the upside here. The United States being on a holiday, it doesn't really have anything shackling it down, and anybody wanting to stay in this trade, I wouldn't be that adverse to doing that. I don't particularly like the entry price is the problem. If you got in as high as I did, really sort of like aiming for something small is probably pertinent and wise. Everything's up except for GlaxoSmithKline. GlaxoSmithKline down 5.5%, but as I say, balanced with Unilever down 5.5% is big, but Glaxo is balancing it out up the 5%. So everything else is solid. Royal Dutch Shell is up near 1% now. So this FTSE could really take off today.
Right, mate. Looks a little bit like 3 little Indians forming there to me, though, I've got to say. We shall see.
With you, mate. Don't like the chart. And this is one of those things, isn't it? How do you balance what some of the messaging is saying to what the other messaging is saying? And I think that the way you have to balance it is just continue to follow your rules and your strategy. And mine is just to come out of first contact. I'm happy with that, and I won't be trying to hold on to anything more. Greed is the biggest killer, really, of any trade, I would suspect, and you just got to kind of take what's on offer.
I like it. Righto, let's get into some game changer bars before George enters. And first up, Aussie Swissy. Now, like I said, I've got no idea why the Swissy rallied hard last week, but it appears that it did. And as a result, we've got just about every major currency weak against the Swissy, certainly last week. Big game changer bar there on Aussie versus the Swissy on the weekly chart. False breakout of that mini range as well, unrateable from what I can see. It just went too fast. Thursday, Friday, bang, back to the monthly pivot. And that's what makes it very, very difficult now to say, all right, let's jump in short. Answer would be no for me right now. But that said, if we came back to the weekly pivot, I think this might be an opportunity to trade it back to at least the monthly pivot and maybe down to this level here. I don't know, frankly, why I'd want to trade this pair, apart from the fact that it does have a little technical signal that we're looking for on that weekly game changer bar. I just don't trust it too much, especially with the weekly, the monthly pivot where it is. All the pivots are kind of very, very close. This looks more like a range to me than anything. And for that reason, I think I'll just leave it alone until it does come back or pop back up here. And if that's the case, then, as I say, maybe there's an opportunity to trade it down. But if it breaks the weekly pivot and retests, it could change the game once again. So I'm going to leave that one alone for now. Cad Swiss is the next, again, game changer bar. This looks far more attractive to me. And the reason it does, we've got a quadruple top sitting there, really. But then if I go into my range trading self, I see this, where we have come off the bottom of the range, which is early days, I know, but it's fairly substantial in terms of time because this is a weekly chart. For that reason, and for the reason I see that there close underneath that trend line, there's also a little bit of confluence going on here with the pivots weekly and daily, monthly back down here, pretty much untested. I think this is a reasonable position to take, frankly. And with oil at a resistance level, I think this has got possibilities. I don't like the size of the candle versus the reward, of course, but it's not that bad. We've got 120 pips down to the monthly pivot, which is 37 pips away. The problem I've got, yes, I like the position, but the problem I've got is that we are coming off the bottom of that range. So I don't expect that we're going to go back through it. And for us to get a reward out of this, we would need 120 pips, say. It doesn't even get us to the bottom of the range. We have to go through the bottom of the range and pretty much down to these lows, or close there too. I'm not saying that can't happen, but the monthly pivot's going to have something to say about that, as is this level through here. So I don't think it's a good reward to risk in any stretch. But if you can find a little way in there, like a false break, for instance, that we're already seeing, then this is pretty much a classic one. Above, consolidate, underneath, retest. Not totally in love with that bar, but I think that's the trade. If you were to trade that short, maybe even underneath today's candle, and put your stop loss above yesterday or Friday's candle, you got a 46 pip risk, and your reward then becomes something wrong here. There we go. A little bit more than 1-to-1. So that makes perfect sense to me then. So I think that one is the one I like more than anything else at the moment anyway. I may even place that order before we leave the show. That's Cad Swiss. I do want to just go and check the oil chart to make sure I'm not getting this wrong. That is the oil chart, and you can see we are at a resistance level. How strong is it? Look, I don't think it's the strongest beast on the block, but it is a level, and I do expect that there'll be a little bounce there. If it goes through there, we're not going to get into the trade anyway. I wouldn't have thought, given the CAD is subject very much or exposed to what oil prices do. So if oil comes off, I expect the CAD will as well. And if that's the case, that would make that trade a reasonable position to take. So if you're interested, I'd put my entry underneath today's bar, I'd put my stop loss above Friday's bar, and I think you'd be doing okay if we do get into that trade. I think it's just a one only. So get in, one profit, monthly pivot, get out, done. Cad Yen, not dissimilar in regards to the game changer bar and the fact that you haven't got much profit there if you were to trade this on the weekly chart. Just don't know if this is too early anyway. I don't see a reversal pattern as such. You could probably call that a double top if you wanted to, and I'm okay with that. But I don't think, again, the reward is there. I do see this potential turnaround, no question, but I just don't see an entry there. Nice clean entry. It's not really there for me. If I look at the false break on this one, I haven't really got enough consolidation. It's just a little bit too messy. So I definitely preferred Cad Swissy over this one. Euro Swissy is the next. Like I said, most of the majors had a bad week against the Swissy, and that's why we saw a game changer bar appear on them all. Again, monthly pivot's an issue. The size of the bar versus the reward that you would get going to the monthly pivot, and you're really going against a potential reversal here as well. So I'd be expecting a higher low off the monthly pivot, maybe a little bounce. Maybe it doesn't go and reverse, but that's what I'd be expecting first up. So I don't think the reward's there again on that one. If you can find a little 4-hour chart, maybe down to the monthly pivot, that would work for me. Pound Swissy, we'll have a look at that. This is not too bad either because of this level here. That's a pretty strong resistance area. And if we have a look at the daily chart, we shouldn't be looking at the daily chart first up. We should be looking at the weekly. There's that big game changer bar sitting right there. It is very, very close to a resistance trade line, which is also a confluence area. There's another level through there. So I think this is a potential short. Actually, it's not too dusty on the weekly. If I look at that, the monthly pivot does seem a fair way away. That's interesting. 170 pips gets us 170 pips. Again, a 1-to-1 scenario there. So if you want to trade that on the weekly, I don't think that's the worst by any stretch either. And far better than the daily looks at the moment. But if the daily were to pop up to that weekly pivot that we're seeing and pretty much look like that, that would also be interesting, but you're trading straight into the immediate support. So I think the weekly would probably be the way to go there. If you're interested in trading that one short, you'd have to, of course, be aware that you're aggregating, or you need to aggregate your risks if you are going to trade that Cad Swiss. Was it Cad Swiss? I think it was. Yes, Cad Swiss. So bear that in mind. They're probably going to be very, very similar trades. Euro Swissy, same as all the rest. You'd be trading into the monthly pivot. We've spoken about that. And the last one is Kiwi Swiss. Kiwi Swiss, very close to the bottom of this, pardon me, of this current range. That level is very strong as well. As you can see through here, it's been strong resistance, strong support. Don't think I'd like to be trading that short anytime soon. So be very careful which one you pick here. But I think from my perspective, Cad Swiss is the best of them. Next best, Pound Swiss. They're the game changer bars. A few more I want to look at a little bit later, but it's George time. Gorgeous George, have you joined us?
I have indeed, Jeff. How are you?
I'm very well, mate. And how about you?
Absolutely well, thanks.
You know, you're talking to a person who now lives in the land or in the land that banished Novak.
You're gonna have to enlighten me, man. The land that banished Novak. Which land is that?
Okay. Novak Djokovic is the world #1 tennis player, right? Or Djokovic, whatever you want.
How embarrassing of me, but anyway, carry on.
Well, it's a very, very long story. He applied for it. I shouldn't really go into it now, but it's a very, very long story. But essentially, he came to Australia under the premise that he had a medical exemption because he's an anti-vaxxer, right? And of course, we've got strict rules around vax here in Australia. But he got into Australia on a medical exemption. But the problem was the medical exemption was from the Tennis Association, not from the government. So when he arrived at the border, the government said, "Oh, you piss off. Your visa's no good, buddy." That's right. Oh, world #1, who cares? So we've had 2 court cases, and he flew out this morning. Gone. Exile. Get out of here.
Paul Peace, but living up to his name, Novak.
yeah, Novak.
Exactly.
Oh,
it's rather ironic, isn't it?
It is. I was
Yeah,
appalled.
yeah. It's,
So
yeah.
one thing I can tell you for sure is that no Serbian will be coming to Australia anytime soon to go on holidays. The country is in absolute uproar.
Yeah, could be caught. I mean, there's deeply kind of felt actually, couldn't it? I mean, it might have some wider connotations at some point. I haven't read much about how other anti-vaxxers feel about this, but I bet they're up in arms right across the world. They're probably quite angry about this.
Yeah, well, we haven't heard the last of it, I'm sure.
No.
Yeah.
Actually, talking to that, very briefly, the pressures continue to mount on Boris Johnson as well, which is another thing that might put some pressure on the pound. You know, as I said before, mate, he's not going to last the year. He's got his own party now coming out publicly and saying he should resign for these parties. Basically, he had COVID parties. So we're talking about COVID-related issues here. He had COVID parties, and the walls are closing in. And the most significant aspect, I think, behind the scenes is, I don't know if you remember a little fella called Dominic Cummings, who effectively orchestrated the Brexit vote. You know, he was the one who was behind the scenes managing how the United Kingdom would vote to leave the UK. Very, very clever guy. He went into government with Boris Johnson as his key advisor. Him and Boris Johnson ended up falling out around about 6 months ago, and he sacked Dominic Cummings. And ever since, Dominic Cummings has been just quietly unweaving some of the things that Boris Johnson was trying to achieve in the background, and he seems to be pulling the strings again. So you don't mess with Dominic Cummings, you know, and Boris Johnson is messing with Dominic Cummings, and I don't think he's going to last long.
No, it doesn't sound like it. The news is all over him. The press is all over him as well. That won't help. You're absolutely right, John. There are lots of Aussies still stranded around the world who can't get home for various reasons. One of them is because they're not vaxxed, I think. But yes, why should a rich tennis player be able to bend the rules? 100% right. And like I said, piss off Novak.
He's got to accept it. Simple as that.
Oh yeah, but he won't. Sorry, George. We're eating into your time, mate. Should we be trading tennis news?
Well, I think we should. I'm just trying to find a chart that I can trade that's got
that's got it on there.
The US closed today, George. How does that affect you?
Say that again.
I said the US is closed today. So how does that affect you?
No, it doesent. I just
Yeah, I mean, the price section is a price section. Like I said to guys, you could be trading oranges or bananas. It just doesn't matter.
Tennis balls?
Yeah.
Yep.
Tennis balls. You could be trading tennis balls. Just go short. Just sell them today.
Yeah, certainly in the Serbian market.
Yeah, just decide where to put your stop and sell. That's it. Thanks, guys.
What's come across your desk then, mate, that we should pay attention to?
Yes, yeah. Let me just share my screen here. Well, I'm officially back. Well, I was back last week, but I'm officially back in action. Today, I need powers, Jeff. I need powers.
Oh, that's right. I'm the host now, because Angel's not with us. Let me see if I can do that, George. Make co-host. There you go. That better?
Yep. Then I can just. So I was just saying, yeah, last week I was just getting myself back into sync in the market. Decided actually not to take any trades, but I saw something that I think would be interesting for guys just to keep attention to. I trade the 7 markets, but there's nothing else that's exciting except on Europe. Interesting enough, talking about Brexit, etc. Let me put it up on the daily. Don't worry about this mess here. This mess is a 5-minute chart, which I will look at shortly. So I think last week I mentioned that I got really 2 key broad strategies that I trade, reversals into trends and then pullbacks in that trend. So this setup, we're not going to spend a lot of time on it. This was Thursday and Friday, but this is, it's a fancy term which I've never mentioned. R23T, that's my strategy. R23T, which means reversals into 2 to 3 day trends. Simple, but I like to make it fancy. It makes me feel clever. So, so that in there.
I was just looking it up in Wikipedia, mate. It's not there.
Good luck. So forget about, that is something we'd have traded if we'd seen it. But today is a setup for going now and look for nice pullback, etc., which is also a continuation of this trend day if it goes our direction. And what I'll be looking for is at least 2 or 3 days of it, another day or possibly another day. And I want to keep selling short if it goes away. Now, let me go into the 5 minute, but before that, remember the daily setups, low of last day, high of last day, 50% pullback, extremely key. And you see why I say that. So I've been tracking this, and I said to my pool and my wife, babes, I got to go to sleep early today because I saw, this was yesterday, I saw something setting up on the euro. I want to make sure I'm in the market if it kicks off. Now, when I'm up, when I see that kind of setup, one of two things can happen. We can get a trend from the open, which would mean that I need to be in. If it just starts selling off right from the morning part, then I want to jump in. Or we get a trading range in the open, which is a breakout mode. So now we've got a trading range. So the moment I saw that, I just went back to sleep and I said, well, I left that line in there. It's not a trend from the opens. There's no point watching it. I'll come back and see what's happening. So I'm looking to go short. That's the most important thing. And there's all sorts of interesting things. And I'll tell you where I'm going to be looking to go short, because if it gives me that entry, man, there could be very good rewards in the day if it gives me that entry. So we created this trading range. And every time I see a trading range, I want to put in my measured move, which gives me a hidden level of resistance up here. So the bulls, if they break above this trading range, they want to get to there. So I'm going to be looking. Let me just put it up for the guys so you can see. I kind of know what it is, but it's important. So I'm kind of looking, when we get to that stage, I'm looking to see if I get a short, a setup for me to go short, okay? So that's pretty key. That hidden level of resistance exists, but you got to find it using measured moves. Then we had a little pullback here, and that created a trading range. And when I saw that, I just plugged that in. And I want to see what happens when we get to that level. And sure enough, when we get to that level, we have another pullback, little trading range. And I have a measured move here. So all of this, when it happens, I'm not surprised because there is that hidden level of support. Okay. Then we had this deep pullback, etc., which creates another little trading range. And it's given me a measured move in the very same area that I'm going to be looking for my short setup. Breakout above that, pullback, little trading range, another. So now I've got 3 levels of support there. So far, I'm getting pretty excited. Okay, if the market gets to there, I'm going to start looking for my setups now. Another thing that I rant on about quite a bit is if you're looking to see where potentially a move might end, it's important to always think of these 3 push patterns, wedges, 1 up to 3. So here's something else that's interesting. Whenever you see a double top, okay, and you get a failed breakout above it, that on its own could be 3 pushes. Market went up, came down, went up, came down, etc. But in this particular scenario, I'm seeing that as 1 first push. There is another push, second one. So if we get a reversal in here, that's 3 attempts to go up. Okay. Market went up, failed, went up, failed, going up again. If it fails in this measured move, then I got all of these factors piling in. And I just want to see, when you get up here, whichever way it forms, either a double top, lower high, or we might get 2 or 3 strong bear candles, fantastic, and a lower high. Then I'm definitely going to take it short and just manage it, because if I'm correct, it will come and break the low of Friday, previous day, and we have acceleration into that second trend day of the daily, and we just manage it, pullbacks, and just keep building our positions. So that's what I'm looking at, and I'll keep my eyes on it and see where it sets up.
Interesting that, George. I think I mean I'm finding the euro. Well, anything against the dollar, I'm finding quite interesting at the minute because Jeff and I were talking about whether, you know, are the Fed likely to raise interest rates on the first time of asking it, and I would have my doubts, but it may well happen. And when what I look at this when I see this chart is anticipation that there may well be a switch, which is driving the euro higher along with other assets against the dollar. But then as the announcement closes in and the announcement gets closer, then we start to potentially see the reversal signs and signals in some of these assets. And I think this could be an interesting level. So you would look at this on a 5-minute chart. So it's only a short move you're really playing here.
No. I used to play them as short moves.
Okay.
Now with this reversal into 2-3 days of a trend. So I'll be saying what I'm looking for is that we've already had the first day. So potentially there is another day and potentially a third day. It might just be etc. So if I take it off here, by the time the day closes, I'm going to take off a big chunk of my profits. So if it's gone away and bank it, then I'm going to leave one trade in, could be 0.5% or whatever it may be, or 1%, depending on how much I've made in the day. And then I'm going to put that stop. I mean, as I trail it through, that stop will probably be at 50% of the day's range. When tomorrow opens, one of two things, I might just get the continuation into the trend, which is fantastic. I can tighten my stop, or it might play out as it does. You know, if I get stopped out, that's fantastic. So the goal is to, by the end of the day, keep some money in the trade and try and take that extra day as well.
I see.
As much of that.
So when you look at a chart on the daily, if it is gone, if you get a breakout, when you get a breakout, is your anticipation by default that we're going to get a retracement?
So here's the interesting part. I want to be in the market and catch that breakout at the stage where no one can see it.
Yeah.
I'm trying to anticipate that, because if that's, by the time everyone says breakout, I want to be in there already.
Yeah.
And then I'll be looking to get a pullback or 2-3 days out of that. Okay.
Yeah.
And then there's always these levels of resistance that I'll be able to see on the chart. Yeah. So I'm not just going to anticipate a reversal. I'm going to anticipate a reversal at a level of resistance.
Sure. Yeah. Gotcha.
So if it's not there, I'm just going to continue trading it. Whether it's pullbacks, just go as high as we can.
Oh, I see. Yeah. Very interesting. And I think also, I mean, I don't like the euro. I think the euro is a dog of a currency, really. I think the euro and the yen are in all sorts of trouble if the world starts to raise interest rates, because they're just not ready. They're not ready to kind of move with them.
Yeah, and I think that's the key difference between the way you find your trades and the way I find my trades. Because I mean, you're deep into fundamentals, which tells you what to trade and what not to trade. I don't pay. I didn't even know that Novak was kicked out of Australia. I don't pay any attention to any news whatsoever, that's a fundamental difference. So for me, I just look at a chart based on volumes and liquidity, and that's it. That's how it comes into my key charts, and I trade from there. If I traded fundamentals, so when you speak, I make sense of it. I definitely wouldn't have it on my list of currencies to trade. Yeah.
No, I get that, mate. And you know what's interesting about the fundamentals? You're still making a huge assumption. You know, you can put in lots of data points, but you're still making massive guesses about what's going to happen next. So it's in a way, it's no more secure than looking at the charts. Ultimately, the charts tell you what's going on in the fundamentals anyway. Or how the sentiment is being driven, but you're still making a massive assumption on what you think central banks are going to be doing from the numbers that you've got.
Yeah, but it's the same thing, right? Because I say to guys repeatedly, even what I've put up now looking at the euro, that whenever I think I am 100% certain, I'm only 60% right.
Yes.
I'm 100% right 60% of the time. So 40% of the time, the market does what the market does.
Yes.
So it's exactly what you're saying. But from price action, there is no ways I can ever say, hey, look at this. I mean, even though this looking like a nice setup, there's no ways I'll tell it's 100%. 60% chance I'll be right. And even if that's triggered, that's why I got to manage it well, because I'm still only 60% right to continue to go my way.
Yeah.
So
yeah. Constant battle, isn't it? We're having with this stuff in many respects, and mainly with our own psychology as much as anything else.
Yeah. Well,
just find your way and do it, isn't it? Find your way. Then do it.
Yeah. That's exactly it.
George, thank you so much, mate. You'll be.
No problems.
Did you realize that on YouTube,
yes,
you have been disagreed with by RCat0? I don't know who RCat0 is, but he's saying you're better to be trading the euro to 153. My goodness, RCat. So I've made some predictions on the euro in the past, but that's a good one, I got to say. But as you pointed out, George doesn't give two tosses if euro dollar goes to 153 in the next 7 or 8 years, which is probably the time frame you're talking about. It's going to cost you a lot to stay in that trade as well, I've got to say. George is trading, as you say, on a 5-minute chart. He doesn't care what happens in 7 years' time. Do you, George?
Too long. No, that's too long for me. Who knows? I might only have oranges, potatoes, and pork bellies on my 7 charts in 7 years' time. So
and tennis balls.
And tennis balls. Thanks, guys. I mean, I'm back in on Wednesday.
You're back on Wednesday?
Back on Wednesday. And the good news, I spoke about it a bit last week. I'm in final discussions with PB on my Wednesdays live at the market with George. So that will be announced pretty soon on ATW at some point.
Awesome. Look forward to that.
All right.
Cheers, mate. We'll catch you next Monday.
Cheers, for sure. Take care. Thanks a lot, guys. Cheers, Ash.
Thanks, buddy. See you soon.
All right. Take care.
I'm just reading. I've just gone onto YouTube. Actually, good. Happy New Year to you, Scalper Joe. Good to see you in, buddy. And David, Kamal, RCat 0. Yeah, you disagree. Euro looks to retest the 153. Speaking of price action, bro. You want to find me? Come on, you know the score. What do you mean I know the score? About what? About the fundamentals. I'm not sure what that refers to. I absolutely don't. I mean, it's all speculation at the end of the day, isn't it? And you know, the thing is about all this stuff is that it's speculation. But if you get your money management right and allow yourself to make mistakes, then and accept that there will be mistakes, then I think in the long term you're going to be okay. That's the bottom line.
Totally. Euro to 153. There's 153. And it hasn't been there since 2008. Bold prediction there. God, it's
going to struggle, you know. I mean, I can't see the euro doing too much at all over the next few years. As I say, if the rest of the world is starting to move, the euro is just a dog. It really is. I mean, it's, you know, the structure of the thing is problematic, and it's been problematic ever since the financial crisis. It's been problematic ever since its conception, really. But the financial crisis, I think, really exposed the euro as a currency, and it's just not in the same position as the other currencies. The thing with the euro is that it's a great idea for trade, but when it comes down to being able to enable every single nation within the Eurozone to get out of sticky situations or take advantage when the situation is very, very good, it just can't do that. You know, but by default, somebody is going to be harmed, and generally speaking, it's everybody but Germany. It's just one of those currencies, isn't it, that is inevitably weighted to one side of the boat. Greece are finding that, and Portugal are finding that. Ireland found that. So I just I can't see the euro I can't. I mean, you can't. You can never say never. But euro at 150.
Indeed, you can't.
Oh, it was a typo. He was talking 115.
Now you're talking.
Oh, yeah. Cool. Okay, so 115. All right. Where's that, Jeff?
Okay, I'm just going to place this trade on Cad Swissy.
No, you're all good, man. I think 115 sounds a lot more palatable to me. Let me just have a quick look on my chart.
Mate, we're in my zone on euro at the moment.
Oh yeah, you know what?
113.6 area.
I have to say, I mean, I think there's some merit to 115. Yeah, I'd go with that too. I think maybe even a little bit beyond that. I just think that I wonder whether people have just gone a bit too early, mate, on the dollar. You know, they got a little bit overexcited with the dollar. I mean, the 10 years not helping, but
I'll have a look at the dollar index in a minute. Gee, it's confusing. I can't make hide nor sense of it, really.
I just honestly, I think that if they're not careful, they're going to choke this whole thing off, and they must be painfully aware that that's the case. You know, we've managed to get on the other side of coronavirus. We might not be fully out of the woods yet, but we are on the other side, and if inflation wasn't there, the Fed would be doing nothing. They would be sticking where they were. And the problem I think that they're going to have is that if they do go too fast, then they may end up choking the economy and having to reverse the whole thing anyway. The whole thing could end up unraveling, and they must be painfully aware of this situation and this fact. I don't think, even if inflation did start to curb a little bit in the summer months, I still don't think they could make the transitory argument. I think it is secular, and I think that they're quite happy to accept that now. But it might not be quite the runaway train by the time we get to the summer. So yeah, I agree, John. No place to move, no room to move, and no place to hide. It's almost a Mexican standoff for the Fed. Totally agree. I think that they really have. I think they've moved too late. Potentially, you know, I'm certainly not qualified to sit anywhere near around the table that they sit around, but the evidence points to the fact that they could have moved too late, and they've done it the same with cryptocurrencies, and now they're doing the same with this. And incidentally, I think that they're going to struggle to get a CBDC as well. I think central banks across the board are going to struggle to get CBDCs out and implemented. The whole, you know, we talked about cryptocurrencies potentially being the nail in the coffin for banks. Well, if they get a CBDC, that's the nail in the coffin for banks. I think cryptocurrencies are probably able to coexist, but a central bank digital currency, I think that would be that could definitely spell the end for banks and potentially for freedom. You know, we'll be completely in the palms of one central body. And I don't think that's going to be a goer. I can't see that going.
Interesting days ahead, are they not? I mean, we're having interesting days now, but yeah, what's around the corner?
The world's moving fast, mate. The world is moving fast, and and you know, at some point, you probably have to just sit back and let it move around you, because actually, the people that are able to sit in a world and enjoy a slower pace tend to make better decisions anyway. Trying to keep up with it, I think it's a fool's game. I wouldn't even bother.
There you go. Okay, I have placed this order on Cad Swissy, and if you want to follow it, guys, I will be entering at 72.63, so 0.7263. Let's write that down. And it's just going to be a one single trade exit at, what is it, 48 pips off that, 0.7215. If I need to micromanage it, that's a good question. I can't contact you guys. Speaking of which, the trading buddies in a circle. I want to talk about that before we close. Ash. Yeah, I just want to run a couple of things past some people. 0.7263 going short and 0.72. What did I say? 1.5.
No. I'll just have a look at David's trade. Actually, 154.96. Let me just check the pound.
1.8. Sorry, 7218 is the exit point on Cad Swissy. If you felt that pound Swissy was also in your ballpark, I'm tempted to trade that as well on the weekly chart, but I just want to see a little bit more price before I do that. So hang on to you. Well, up to you guys. The setup's certainly there. Certainly there.
Yeah, Scream is trying to make an inverted head and shoulders from what I can see from there.
It is, yeah. So here's the target, that's for sure. Monthly pivot. And I think the monthly pivot's the target on a lot of these pairs at the moment. So David's trade, Swissy, pound yen, wasn't it?
Pound yen short, yeah. Which again, you know, if we refer back to the COT data again, yen is quite strong when it comes down to COT data. So the yen isn't the worst one in the world to go against the pound. And I've got to agree, short on the pound to me is going to transpire. Now, I don't know when. That's the difficulty with this. And it might be too late by the time people get in. I think maybe sort of like trying to ease in and take a bite out is fine. You got to be careful not to be so early that you run out of bullets and you're not able to take the trade. But I do think the Boris Johnson factor is the driver right now. And I think the Boris Johnson factor is going to drive that pound lower as we get uncertainty about the nation's leader. I don't think there's anything. The problem is there's nothing else that I can see that will drive it lower. Fundamentals.
It's looking to give us a good price because it's pretty much the strongest currency on the board so far in January.
Yeah. Fundamentally, it's good, mate. Fundamentally, the UK economy is in relatively good shape, and I think the fact that the Bank of England are looking to raise interest rates will likely drive the pound higher at some points during this year. I don't think the Boris Johnson effect will be damaging longer term, but it will probably have an initial impact. It will probably have an initial impact on the price of the pound as we get that uncertainty phase when we try and kind of install a new leader or potentially get another general election. You know, who knows? We've had so many in the last 5 years or 10 years that another one probably won't be that much of a shocker for the UK public. But I don't see any other driver, which means that if you get into the pound off the back of the potential that Boris Johnson could get the tin tack, then you might be going so early that you get run over a few times before it actually does transpire.
Yeah, I'm just having a look at this pound yen. I can make a case either way, I've got to say. Can make a case either way.
Yeah, not really something that I'd want to get involved in just yet. I've got to be honest, mate.
Yeah, same. I mean, that's a classic break and retest right there. And that's a monthly chart I'm looking at. So it's a failed false break at the moment.
Well, this is it, isn't it? And I suppose this is the problem. I think us being on air, we're going to look at these trades and these charts. But I think the most important thing for you, David, is if you've done your analysis and that's your trade,
absolutely,
that's your trade, stick with it, mate. Because as I say, it's all speculation.
Yeah, look, as I said, I can make a case either way, and the case I would make for the long is that. For the short, rather, is that. But I'd be wanting myself. I'd be waiting for a retest of that level, a pullback off it, and a lower high. That's where I'd get into the market. But hey, as you say, Ash, if you're in and got a plan, David, go hard, mate.
Yeah, because that's not the worst area in the world to go short. That's for sure. You know,
no, absolutely.
At a point of resistance, doesn't it?
Yep. Yeah, just not yet for me. That's all.
Yeah.
A couple of other things that I.
Yeah.
Sorry, you go.
Well, I was going to ask you what the update was, but you're probably going to get to that in a minute.
Yeah, we'll get to that in a tick. What am I watching? Two, really. This is my hot watch list for the week, or the next couple of days anyway. Kiwi Yen, short. If today's bar closes pretty much as is, I'll be wanting to jump into that short underneath it. The problem is going to be the low of Friday. That's a problem area, because it's not just the low of Friday. It's also a strong support level. So that's going to be an issue. Much rather get into it up here, of course, but I think this is going short by the look of it. And dare I say it, Kiwi Dollar looks very much the same thing. The thing with Kiwi Yen is that it's rolling over at the moment, and we're right on a point of, okay, this is a point of interest because of that horizontal level. So it's either going to bounce off it or it's going to go through it. That I don't know. But trading that bar there is going to be very, very difficult. But if you can pick it up on a 4 hour as a lower high, maybe it has to go back to here first. Maybe it has to go back to here and I can pick it up there. So that's what I'm probably looking at this week, waiting for that to happen. 4 hour chart, too tough, but a reversal bar off the weekly pivot. Say we close here on the this 4 hour chart, that would be interesting, because I could then place an order there, put my stop loss above the weekly pivot, and get some profit in the bank before we got to those lows. That makes sense to me. Kiwi Dollar, yeah, it's interesting, a bit of a broadening pattern, and I think we're probably at the top of that. But if I also have a look at, if I go a bit tighter, if I also put that in there, for instance, I can go right back to there, and it's giving me bounce off the top of that again. So looking for a lower high in here off today's daily pivot would make sense also. So again, up to here, I think I'd like to see it go a bit higher, to be fair. So maybe the best way to get into that would be as a false break of that level there. So get up here, break through it, come back underneath it, retest the confluence area, and then short down to the bottom of that range, or range for me, which of course is the ascending channel. Do I have any more? No, I think that's it. That's my watch list for the week. And of course, we've got the Cad Swiss. If you want to follow that, that's there on the chart. Pound Swiss, I think, is also a good one. Just watch your aggregated risk on. If you're going to trade two things against the Swissy, then just watch that risk factor. That's all. So, trading buddies in the circle. Ash and I have struggled to get enough content into that, and one of two things going to happen, I believe. One is we will discontinue it, or the other is, if you guys want to contribute to it and continue the Trading Buddies theme, as in you want to discuss orders in their trades you've taken during the week, or ask an opinion, then maybe that's still possible. But I need to have a pretty strong interest in that before we made a decision. So if you do have a strong opinion on that and you would like to voice it, if you could just email James, contact@actions2wealth, with the subject line Trading Buddies in the Circle, then that we can correlate that and go from there. So that's pretty much what I had to say, Ash, on that.
Cool, mate. Well, just so everybody understands, and to be clear, we're not stopping the show. The show is going to continue Monday and Thursday. This is the Telegram. Trading Buddies is the Telegram.
Oh, sorry, didn't I make that clear?
Well, no, you probably did, mate. But just in case somebody missed some of the words that were being used. But yeah, so show's going to continue regardless. We're still going to be here Monday and Thursday, trying to do our thing.
Happy days. We will certainly be doing that. As you've had your winner, I've got an order in the markets. There's nothing more that I need to do, I don't think, from a chart point of view, except have a look at that euro. And the reason I want to have a look at that euro is, you know, how fixed I am on that one level, 113.60. I just want to have a look at what's happened around it recently. I haven't been in front of the chart, so I don't really know, but I know we're in the vicinity somewhere. 113.60, there it is, eh? It's an unreal level, I tell you. It just keeps doing it, doesn't it? That's a monthly chart. What's it been doing recently? Okay, we may well be headed back down there. Where's the daily pivot, for goodness sake? Calling all daily pivots.
Yeah, John's just saying, could they both be combined? A twice weekly update through Telegram to go along with this, alongside the show. We sort of tried it, John. Jeff and I. Well, Jeff was doing more than I was. I mean, it's just I just found it really difficult to add to my workload. If I'm honest, it was just quite a lot. Yeah,
And
no, that's fair enough, mate.
And for me, I've got a new commitment, which is with my slingshot trading group, which will happen, I think, in February. I think that starts. So we've just done a slingshot course on Saturday. We're doing another one, part 2 of that, on next Saturday. And as a result of that, those who want to go on with the slingshot system and learn in a little bit more detail, I'll be looking after those in a Telegram group. So that's going to restrict my time even further. Yeah, I think it's kind of time I realize that and not push everything.
Well, yeah, I mean,
just for content's sake, you know.
John's saying he likes the twice weekly show and keep the live shows, and everyone should contribute through the show. Yeah, I totally agree with that. I think we got it just about right now. Personally, I think the show every day was great, but I think it was starting to impact a little bit. But I think Monday and Thursdays with the quiz involved, of course, John, with your extra special knowledge, I think it's the right format now. Personally, it seems to be working better.
That's doable
yeah.
for me.
Everyone's less stressed. Yeah, exactly. Yeah, this is more like real trading. Absolutely, John. Yeah, because you're not kind of you're not having to find something to talk about. I mean, if we haven't got a trade on a Monday, at least we can talk about the week. So when it gets down to Tuesday and Wednesday, if there's nothing kind of due, sometimes we're just sitting here, aren't we? It's just it was rare, but every now and again you just get one of those days. Yeah, like that, John. Yeah. 2 days chat, 3 days your own trading. That works, doesn't it?
Where are you seeing this?
Oh, he's sending me direct messages, mate. He's not interested in you.
Oh, okay, got it. Got limit order long for FTSE. There you go. Run that past Ash.
Oh, which one's that? Got a limit order long for the FTSE. Yeah, I reckon that's pretty good, David. I mean, the FTSE looks pretty hot today, doesn't it? What price you going in at? Well, I don't know whether we. Yeah, I think limit order long is good. If the limit order, my personal take would be, if the limit order isn't triggered today, it might be worth coming out, because I think the fact that the US market is offline today is probably adding some extra volatility. So it's probably going to enable the FTSE to continue to move. But come tomorrow, we might see a slightly different picture. So yeah, that's the only thing I'd be mindful of.
Yeah, look, RCAT 0, no such thing, mate. You know, I mean, you might be a moron because I don't know you, but not for what you're thinking. That's not the case. I can guarantee you, if you put 10 traders in the room, all technical analysts, you won't get the same opinion.
No.
In more than one or two of them. We all see charts very, very differently. And I see something, David's seeing something, you're seeing something completely different. As long as you don't trade the wrong one, then everything's okay. As long as it sits with you, that you've got a level of certainty about what you're doing, and that's not just a mind thing. You think, oh, okay, this is going there because I think it will. As long as you've got a system that allows you to play that in a relatively safe manner, good as gold. But just a thought process ain't going to work over time.
No, I agree. And I think the other thing is, as long as you don't put all your hopes and money on that one trade. I don't have a trade on GJ, just to be clear. Yeah. Well, I mean, this is the thing, mate. And then, we're just giving opinions, aren't we? We're just sort of like having a look around the market and saying, this is what.
Which is absolutely what the show's all about. We're here to do exactly this. Exactly this. And thanks for all the contributions. It's good.
Yes, that it is. So are we wrapped up, mate? I think we've hit the 9 o'clock threshold. I don't know whether you've got any more that you wanted to add.
That means it's beer o'clock, right?
It's beer o'clock. Yeah, I think it is. It's time to. And
I've got to go back in time. And Gary, I didn't mention the cricket because it's like, don't mention the war. The Poms would say, don't mention the war, right?
Yeah.
I don't think Ash follows the cricket anyway, do you, mate?
I don't, mate. No, I was watching the wild cards playoffs last night. NFL's back in. It's getting close to the Super Bowl again, mate. I don't know if I am around, we'll have another Super Bowl party, you and I.
Happy days. All right, we'll do that.
I don't think it's going to be Mahomes this year.
The English team are in absolute disgrace at the moment, I'm afraid, mate.
Oh, okay. No, I don't follow. I
So
don't even know any of the players.
I was actually supposed to be at the cricket today.
Yes.
Because today's day 4 of a 5-day test.
Right.
But your side couldn't make it stretch more than 3 days.
Okay. Okay.
So here I am. Instead of being at the cricket drinking beers, I'm here in front of the charts, which is probably where I should be anyway at the end of the day.
Yeah. Well,
but it is now beer o'clock.
I wish I did like it, mate, so you could enjoy the victory a bit more. But unfortunately, I can't provide you with any kind of target to kind of batter on this occasion.
How about Chloe might? But
you never know.
Probably not. All right, let's get out of here, shall we?
Yeah, sounds good, mate. Okay, have a great week, guys, and we will see you on Thursday, ready for the quiz and any trading that we can take. We'll see you Thursday, same trade time and same trade channel. Thanks, as always, for being our buddies. Thanks to you, Jeff, for looking after us today, and thanks for being my buddy as well, mate. I'll see you on Thursday.
Totally, and not being at the cricket. Cat Zero, it's a pleasure, mate. Thanks very much for your contributions. David, good luck with those trades, buddy. And hopefully you can catch us on Thursday as well. Bring your pencils and sharpen them up for that quiz that we'll have as well. Have a great week ahead. Bye-bye for now. Oh, I've got to shut this down, don't I?